most popular formulas that you can utilize quick and know if a real estate investment's a good investment or if you should run. And number one, which is one of my favorites, is cash on cash return. What you do for this particular formula is you take all the cash that you would invest in a project if you were utilizing cash. Even if you're looking at a big project, you look at the cash outlay, your down payment, if you're buying all cash, the closing costs, the realtor fees, inspection, all cash in when you first buy the property. And then you divide that into the purchase price for a percentage. That is your percentage of cash on cash return. Mine is 21% or higher. That's the only way I will purchase a property. If it's below that, it's getting to that line. Well, if something bad happened, a vacancy, water main broke, something happened, you don't want the margins to be so thin that you would lose money. We're not about losing money in the DMoney world. The next one that I utilized when I bought apartment complexes is the cap rate. The cap rate for a property is when you take the net operating income and divide that into their purchase price. And that will give you your cap rate. For me personally, unless it's 12%, I wouldn't look at a property. The higher you go sometimes though, it's not better. It's a war zone. There's a fine line between a good cap rate and a bad cap rate. The other thing when you're looking at cap rate as your analysis, this would always crack me up when realtors would do this beautiful presentation and give you a pro forma cap rate. Don't let anyone do that to you because you're the one that's doing the work. They don't get to price in you doing the job well for their price. No pro forma cap rate analysis. You take the net operating income of what's happening right now, and you look at, especially for apartment complexes, you would look at a 2-year historical of their numbers and divide that into the purchase price, and that is the true cap rate. Net operating income divided into the purchase price. You can work that backwards as well when you're going to go sell the prop to figure out what your sales price is going to be. If you're in a market and you look through your analysis that everyone's selling at a 7 cap, 8 cap, you need to figure out what that means to you as the purchase price. So you would reverse engineer that. You would take your net operating income and then you would multiply your net operating income and say you want to be an 8 cap. NOI is 200,000 times 8. There's your purchase price. Quick formula. I utilize that with apartment complexes. Then there's also the gross rent multiplier. This is taking the rent, as it says, the gross rent multiplier. This formula helps estimate a property's value based on the rental income. It's dividing the property's purchase price by the rental income for the year. That gives you the gross rent multiplier. Quick model, I wouldn't utilize that as this. I'm going to look at just the gross rent multiplier as my deciding factor. It's just one of the quick calculations you can do. And you have ROI, taking the net profit and dividing it into the purchase price as a percentage. That gives you your return on investment. Where the cash on cash return, you take all cash outlay, everything that you're going to be spending in cash and dividing that into the purchase price. With ROI, you're taking the net profit and dividing that into the cost of the investment to give you your percentage of return of investment. This next one's a big one. It's the debt service coverage ratio. That's really, really important. Right now, there are a lot of loans out there that are available to real estate investors utilizing this formula. The DSCR, debt service coverage ratio, is the measurement of the property's cash flow if it can cover its debt. So you want it to be a 1.0 or higher. So you take the NOI, the net operating income, and you divide that into the debt service. And that's how you get that to make sure there's enough coverage of the debt. You have to ask each individual lender what their number is for the DSCR because there's a lot of DSCR loans out there available to real estate investors. That's DSCR as a quick calculation. You want to make sure there's enough money to cover the debt. Your NOI, your net operating income, is the net number after all the operating expenses, all the deductions are taken out of your cash flow from the rent roll minus debt service. So you do not include the debt service as not taken out of your NOI. So your NOI is before debt service. And that is your net operating income. That's how you calculate it. few of the quick formulas that you can do to see if you want to move to the second round of due diligence. If you find this content valuable, please like or subscribe. And I'm going to go over the second half that you'll hear real estate investors throw around. And you just want to make sure, especially if you're wholesaling real estate, that you know what they're talking about. So you're educated. And one is people utilize, as we said before, the cash on cash return. And then you have the 2% rule and the 1% rule, which is the same rule, just a different number. And that's to make sure that your rent number is correct. So you have a $150,000 home, and at 2%, you should be able to charge $3,000 a month for the rental income. If not, you might have other issues. You want to make sure that you can get that rent for that neighborhood and make sure that you are safe. Like I said, like it to be idiot proof. And there's enough cash flow being thrown off that if there's something that happens, because there always is, you have enough money to cover it. Also, just a couple questions to ask someone. If you're going to look at duplexes, triplexes, or quads, what you want to find out is if they are separately metered, if they have a different water and utilities, that they're separately metered, so the tenant is responsible for that. That is the number that can get out of control. If they're not separately metered, my advice would be get them separately metered, especially for the water. I've been zinged so many times. If there's a leak, they don't care. They won't tell you. It doesn't matter to them. They're not paying the water bill. That's a question that you need to ask when purchasing duplexes, triplexes, and quads. Also, when's the last time they've turned over a unit? If you were looking at a duplex, if tenant has been there for 8 years, you could think, great, they've been there 8 years. Right, great. Nothing's been done for 8 years. Little things like that you want to look at. Obviously, how old is the roof? The electric hasn't been upgraded. Make sure that it's up to code for the year that we're in and not fuse box, like a knob and tube. You don't want that. Very bad. Same with plumbing. Foundation issues, what we found through the years, it's an automatic $15,000. Automatically will be $15,000 no matter what out the door for foundation issues. This seems to be their number. Are you buying this property for yourself? You walk the neighborhood? Do you feel comfortable? I always tell everyone when you knock on the door, click rent, stand to the side because you don't know what's on the other side of the door. Are you close to schools? The rental home. My biggest mistake that I made early on when it was the first few rental homes, I look at appreciation as a bonus. Usually when you're buying for cash flow, it's not a big appreciation buy. It's a cash flow buy. You can still make money above and beyond just the cash flow. And that was the biggest lesson I've learned. I mean, we pick up homes now, unbelievable price, because we take the extra time to find distressed sellers. If you're a real estate investor and you have a day job, you're busy, you have a big corporate job, you want some passive income, you're looking at real estate as a possibility because you want a passive income. Maybe you want to quit your job eventually and just do this full time. There's different stages that you go through as a real estate investor. If you have a full-time job, you don't have all the time in the world to find distressed sellers. You might work with a wholesaler that wholesales real estate. There's nothing wrong with working with a wholesaler. We buy a lot of properties from wholesalers. There are some really great wholesalers out there. You just have to really look for them. We can help with that as well and start. Hopefully all the wholesalers out there are watching our videos. If you're just average or kind of good in wholesaling, you're above 99% of everyone out there. It's kind of like finding a great realtor. It's a diamond in the rough. There's not a lot of great examples. There are good wholesalers out there. We buy properties a lot from wholesalers. Sometimes we'll wholesale. We'll be in a market and we'll spend $5-10 grand in advertising per month. We don't want every home that we get back, but it's still a great deal. So we'll look to wholesale at times. That could be our exit strategy as well. It depends on the phase and cycle that you're in, what you want to do and what you're willing to look at as far as a real estate investment. How much time do you have on your hands? We used to always chuckle between ourselves as real estate investors. You always know if a doctor was buying, they want to drive by and show their friends and family, hey, that's my rental home. They have pride of ownership. They look to be more in that 6 cap, 7 cap range and have more of an appreciation buy down the road. For them, that's how they typically buy. You really want to think about about it and think it through. What phase are you in your life? Are you looking to quit your job and make this your full-time job? Should you work with a wholesaler right now? Are you looking for high cash flow return because you want to quit your job? Or do you have a full-time job and this is just always going to be for additional passive income? That is going to weigh your decision of how you want to move forward and how you build your empire. I hope this content was valuable. Please like, subscribe down below. Ask me any question. I would love to hear from you guys. And if you want any particular video, I'll be more than happy to make it. This is DMoney.